Hey, what's up, guys? We are excited to announce our new business, Pinnacle Credit Professionals, Pinnacle Credit Pros. I'm Justin Brady.
And I'm Brian Nelson.
And we are Pinnacle Credit Pros. We just want to take a few minutes today and talk a little bit about Fico scores, credit scores. Just to give you a little bit of background. So I've been in bankruptcy for the last several years, and Brian has been in accounting for the last several years, and we've seen a lot of people in a lot of cases where people are just struggling. They're having a hard time trying to make ends meet. They're just strapped, for lack of a better word.
Right.
And I've met with several people lately that they just have these outrageous interest rates, and they have these high title loans and payday loans, and ultimately they end up filing bankruptcy. So really, that's kind of one of the things that Brian and I have been discussing for several months, is how can we help people get to the point where they don't have to pay such high rates and high monthly payments. And so we decided that we wanted to go into credit repair, and we're super excited about it. We would love and welcome questions. You can find us at pinnaclecreditpros.com, or reach out to us via Facebook, Instagram. If you've got our phone number, shoot us a text, email. Anyway, let's give Brian a couple minutes to talk about FICO scores a little bit.
Yes, that's one of the big things that we've been seeing is, a lot of our budgets, we kind of look at our own and we want to have the most cash flow as we can so we can buy things, right? And so that's kind of what we have back here on the board. So hopefully you guys can see it. If not, maybe rewatch the video and kind of check it out. But basically what we want to do is look at what a credit score really costs you. So we've talked to a few clients this week, and they don't really understand the cost of having a bad credit score. So this is an example based on a 30-year mortgage. It was done a couple years ago when I actually ran these numbers. But what happens is we have our lower credit scores down here starting at 500 up to 720. And so what a lot of people don't know is based on your credit score is the interest rate that you're going to be getting when you finance a home or an automobile. So those are typically the things that we finance. And so over here on the right-hand side, we put additional costs to you. And so if you're at a 500 to a 599 score based on a 30-year mortgage, interest rates ranging from 6% to 9%, the cost to you can be $287,000. What would you do with an extra $287,000, Justin?
Oh man, the list is a mile long. There's a lot of things I could do with an extra $287,000. I would love it.
Right. Maybe buy a new house, vacation property, whatever.
Lambo, whatever.
Lambo.
Yeah.
Hey, right there it pays for a Lambo.
Yeah.
Then we start creeping up, go from a 560 to a 619, still cost you $143,000. A 620 to a 674, $86,000. And it's not until you get up to the 700 range with your FICO score that you're not losing as much money. So a 700 to 719 still costs you $7,000. That's still a big chunk of money for me. And so
it is $7,000. I can think of a lot of things that I can spend $7,000 on. I can take a vacation with my family for $7,000. So yeah, I'd love to take
all
it.
paid based on a good credit score.
Exactly.
Right?
Exactly.
And so our goal is to get you up to a 720. So if we get you up to a 720, you're going to start getting the best financing there is. And so the reason that you lose these monies right here is based on a higher payment. So I don't know if you've ever destroyed your credit, but you go in and you try to get financing on a car, you're paying like 14% interest versus a guy that's going to pay anywhere from 0 to maybe 3%. And so that difference in the monthly payment costs you more money, or it costs you a type of vehicle, a quality of a car. So
yeah, if you got two cars, you got a house and two cars, you've got a 600 FICO score, you're spending an extra $300, $400, $500 a month on your mortgage payment, and probably an extra $300 a month between the two car payments. That adds up quick. That's a lot of money every single month, especially if you're a family You know, if you're going to school, whatever the case is, you're gonna have all kinds of extra expenses that you could put that money towards.
Exactly.
I would love to have an extra $400 or $600 a month
Oh yeah.
that I could just pocket or save and put in other places or put in other investments.
Exactly.
But really, like I said, you know, if you have any more questions, please reach out to us. Check us out on our website, pinnaclecreditpros.com. Shoot us an email. Shoot us a like. Share this if you like.
Maybe put a money
Please
bag.
ask questions. A money bag.
Yeah, put a
definitely.
money bag down in that comment zone. you know.
Exactly.
Let us know that you saw the video.
Exactly. And yeah, let us know if you have any questions.
Yeah,
Good to
we're-
talk to you.
Yeah,
Look
love
forward to the next time.
Yep. Love to help you guys, so reach out. All right.
Thanks a lot.
Okay.